Hey everybody, today we're continuing our series on low and no money down loan programs. And so today we're happy to have Ben with Sierra Pacific Mortgage back in office with us. And today we're going to talk about USDA loans, which is a 100% financing option. So Ben, we appreciate you coming in
Chris, thanks
and
for
being
having
with
me.
us and talking to us today about USDA loans. And this is one of the few 100% options that buyers have. Obviously, there's some limitations that we're going to talk about today. So we want to be real clear and make sure that people understand that this is not an everyday situation loan, and
Certainly.
so we want to roll out the specifics for who this is good for and who it's not. So just jumping right in, easiest thing to do is let's talk about credit score first. So somebody that is looking for a USDA 100% loan. Let's talk a little bit about what the credit requirements are for this particular loan.
Certainly. So USDA is a little more stringent than you would find with FHA, VA, other government programs as such. And with USDA, you're capped at typically a 640 credit score is the max they want to see, or the lowest they want to see. But you can actually do a manual approval with USDA down to a 620.
Okay. And so before we dig too far down in the weeds on this, just want to tell everybody a little bit about what a USDA mortgage is about. It's not, it's basically designed for rural areas, as you can probably speak to very well. And there's a map that says, what areas are available, what areas are not. So, for you, if you're looking in the heart of Wilmington to use a USDA loan, it's not going to be an option. So this is going to be places that are a little more outside the main city areas. So is that something you want to talk about a little bit more?
Absolutely. What we always do when Chris will refer a client over to us and they want, then USDA is an option. What we do is we take a pocket of some of the houses that they've told Chris they're interested in, and we're going to plug them in the USDA eligibility map, because USDA is based, as Chris just said, on geography. And there's very small pockets of Wilmington and New Hanover County that are USDA eligible. They actually shrunk that map a little bit over the last year. But we're seeing, Pender County, completely USDA eligible. Brunswick, surrounding counties to us, absolutely, you can go USDA. So what we always do is make sure, because it is property specific, we always make sure that we plug that address in, so that way you're not going down, to your point, like down the rabbit hole of looking at homes that don't qualify for USDA.
Sure. And let's talk about, everybody here's 100% financing, but they're not sure sometimes if that truly, it sounds very good, but is that truly what it is? And so let's talk about down payment. What fees are there? What costs are involved? Is it basically, are there things that we can actually do to get it true zero down, or seller contributions, things like that? How does all that affect what somebody, that wants to buy a house and is okay in that USDA territory, but really wants to truly get into a home with zero money down? I mean, what does that look like for them?
Well, as far as the down payment goes, it is 100% financing. There absolutely is no down payment requirement for USDA. When we get into money that a client may need to bring to closing, we talk about closing costs.
Sure.
Closing costs are derived of two things: cost of business, and then your escrows for taxes and insurance, which you would be required to escrow anytime you do a USDA loan. You also have your mortgage insurance with USDA, which is only 0.35% monthly. So if you're borrowing $100,000, your monthly mortgage insurance would be $35 a month. So very low mortgage insurance. You get discounted mortgage insurance with USDA up to 100% financing. A lot of times too, what Chris will do in his team, they'll negotiate on your behalf if you need closing costs paid. If you need help with closing costs being paid, Chris will negotiate that in your offer. And I've noticed we've done that on quite a few deals. So it can truly be a zero down transaction when you walk into the home.
Yeah, and essentially that is the goal. So what we do is we will go in and, like Ben said, we'll look at the houses that you're actually interested in, and we will we'll look at the taxes, we'll look at everything, and we'll put together an estimate of what those closing costs will be before we make the offer, so that we can go in and try and get those covered by the seller. And so while we're talking about that, what is the max contribution that a seller can make for a USDA loan?
Great question. 6%.
Okay.
And very rarely, and we did a video a few weeks ago, Chris, about FHA financing, and we talked about it. That contribution 6% as well. what I want to make sure that folks know is this: closing costs generally are not that high.
Sure.
But you are allowed to go up to 6%. So if the seller agrees to that, we can even look at options outside if you have extra money left over laying on the table in closing cost accommodations from the seller. We can even look at options of buying the interest rate down,
Sure.
potentially, things of that nature. So it definitely will cover your taxes and insurance, the cost of business, and all that good stuff. And we leave it up to great realtors such as yourself who negotiate hard for their clients and get them the best deals possible to come up with those viable options for our clients.
So let's talk a little bit about income restrictions for a USDA loan and how that affects somebody that may or may not qualify for that specific type of loan.
Certainly, Chris. That's a great question. USDA obviously has income caps. There's income restrictions and guidelines that are pretty stringent that you don't have on other loan products. And it's basically based off of a couple things. It's going to be the amount of folks living in the household. Mm-hmm. So if you have a 4-person household, your income restrictions are actually going to be at a higher level where we can actually get more people qualified. If it's a 2-person household, it would be less per se in some cases. So the way it works is this: we go to the USDA site and we plug in the numbers. If I'm the only borrower on the loan, but I have a wife that is working that isn't on the loan, I still have to go off of the household income, including her income. Now, we're not using it to qualify for debt ratio purposes,
right,
but it gets calculated into the USDA overall income calculation to make sure you're eligible.
So in talking about that debt to income ratio that you mentioned, what does that look like for a USDA loan, in terms of requirements? What are they looking for that scenario?
That's another great question, Chris. USDA is again stringent about debt to income ratios and really making sure that folks are in line with their guidelines. And what they look for is a no higher than a 29% housing ratio, which is called your front end ratio. Right. Back end, they like to cap it at 41%. Okay. Now, I have had a lot of scenarios where folks with really good credit or compensating factors, we can get approvals USDA up to 43, sometimes 44% debt to income, and maybe 31, 32% household income. But it's a very fine line there. So when we qualify someone for USDA financing, we really need to make sure up front that we've got an insurance quote that's realistic, the exact amount of taxes on the property they're looking at, how much that's going to be, so we can calculate all that stuff into the debt to income ratios. So we make sure, especially if somebody is a little bit tight and on those windows, because USDA doesn't really give a lot of variance there. Okay. But if you've got great credit and some compensating factors, they will be a little more lenient towards their approval, but they just won't go much higher than what I just mentioned.
Well, let's jump to an interest rate question for a second. Mm-hmm. Obviously somebody that comes in, they're trying to figure out what option they want. In terms of if they were kind of on the fence between an FHA and a USDA or maybe a 3 or 5% conventional loan, there are options out there. But let's talk about credit score and how it relates for a second. If we had to put a tag of good, better, best on a USDA, maybe versus an FHA or something like that, obviously we're getting 100% financing. But do you give something back, on basically your interest rate there? How does that relate into some of the other products out there?
The USDA interest rates are priced pretty much just like FHA and VA. They're government insured, government guaranteed loans. And USDA rates right now are fantastic. We're seeing them in the low to mid 3s on a 30-year fix, depending upon what you're qualifying for. So even with 100% financing, you're not giving into a higher rate.
You're not giving that back with a higher rate.
That's right, and it's not an adjustable rate mortgage either, like you're finding with some of these other products out there that are 100%. This is a good old-fashioned 30-year fixed mortgage, no prepayment penalty, no monkey business, and you get an amazing rate.
And you touched on PMI a minute ago, but just wanted to kind of revisit that for a second. That it sounds like the USDA has a very low mortgage insurance rate. So when people ask about PMI, it sounds like that one's very low. So that's something that is a question that we obviously get.
Absolutely. I mean, 0.35% monthly, you can't beat it. FHA in retrospect is 0.85%. With conventional financing, we price out mortgage insurance between the top 5 or 6 carriers in the country.
Sure.
And even with perfect credit, it's typically right around 0.3% or 0.40, whatever, what have you. So being at 0.35%, say you have a 643 credit score, if you were going to go conventional with that, your mortgage insurance would probably be right around 1.3 or 1.4% monthly.
Yeah, big difference.
Yeah, absolutely. So with USDA, you get discounted mortgage insurance, discounted rates. It's just a great product.
And so to clarify on that too, on the USDA product itself, that mortgage insurance, does that fall off at a certain point? Is it the life of the loan? How does that work for USDA?
USDA mortgage insurance is on for the life of the loan at
Okay.
this point, and I haven't heard of any inner workings to have that changed right now. But it is on there for the life of the loan.
Absolutely. And how about fees for this particular loan? What do the fees look like from
Certainly.
the government?
Well, USDA just charges a 1% upfront mortgage insurance premium funding fee.
Okay.
In retrospect, FHA charges 1.75. VA right now VA has just increased their funding fees as of late. So with USDA, 1% funding fee. So if you buy a $100,000 house, you're looking at $1,000.
Yeah.
So it's very affordable. It is 100% tax deductible as well, and it's just it's a great product. I can't say enough great things about USDA.
Good.
It just has to be the right fit.
Right. And speaking of that fit, I know we talked about where the property itself has to be, but let's
Certainly.
talk briefly about what kind of property it has to be. Is it just for single family home in that area, or can it be a condo, townhome, something like that may be in that area as well?
Well, you don't see a lot of condo financing on USDA. It's just not very common because, how many condos are typically in a rural area, right? You just don't see a lot of it. What we do have, though, for manufactured products, as an example, it has to be brand new. You can do a 100% USDA financing on a brand new manufactured home,
Okay.
not on an existing.
Okay.
FHA will allow you to go back all the way to 1976, 1977. Same with conventional. It doesn't have to be brand new. USDA requires that it's brand new, but you can do a new modular, and you can do a new stick-built detached single-family residence or townhome as well.
Okay.
So,
very good to know.
yeah,
Well, we covered a lot of stuff. I think that's predominantly what we kind of typically get asked. Want to give people a little more information about that. But if somebody has questions and wants to know a little bit more about a USDA or even FHA or whatever loan, how can they get in touch with you?
Well, Chris, we'd love to assist your clients and all the folks listening out there. If you have any questions at all, please don't hesitate to reach me on my cell 24/7 at 910-352-3373, 910-352-3373, or visit my website at lendwithben.com.
Well, Ben, we appreciate you having on the show today.
Chris,
and,
thank you so much.
Hope you'll come back again as we kind of talk to our folks about different loan products and everything. And of
Absolutely
course,
love to.
Looking for a big year in 2020, and we appreciate all the support that you give our clients. If you guys have any questions, feel free to reach out to us or Ben directly at the information that he just gave. So thanks again, and hope you have a great 2020, and we will talk to everybody soon.
Hey, take care.